Up next, it's our chance to do a deep dive in both the grain and livestock markets. And joining the program this week is Barchart Senior Analyst Darin Newsom. Darin, it's great to have you back here on Market Journal. Thanks for making time.
I appreciate you having me back on, Bryce.
Well, it's been kind of a wild ride for both the grain and livestock markets. Let's start on soybeans. Quite the rally we've seen here. A lot of that has to do, at least the analysts tell us, that's because of the announced China trade deal. Have you had a chance to dig into that? And if so, what kind of concrete figures have you seen there?
Yeah, it kind of ties into the livestock because it's similar to digging into a feed yard pen. There's nothing to it. China won the quote unquote meeting or whatever we want to call it. There is no deal. The U.S. backed down on its tariffs. China has agreed to do what it was doing before, nothing more, just what it was doing before. 25 million metric tons per year. That's what it was before, actually smaller than some of the years before. So, yeah, it's nothing. It doesn't amount to anything. U.S. is still a secondary player on the global in the global soybean market. That's the way it is. China's still buying. Three cargoes of U.S. soybeans were announced to sale. They just bought 10 from Argentina. So what they're doing is business. This is the time of year they cover some of their secondary supplies from the United States until the next round of South American supplies are available. The rally that we're seeing in futures, a lot of it's coming from the algorithms. They're buying some based on strange headlines. But we saw the same thing last year. How'd that turn out for everybody? So I'm not reading much into it.
All right, let's switch from the soybean trade over to corn. Kind of stuck in this sideways pattern again for corn here over the last bit. What could break the corn market either way?
Probably not going to be much of anything. I think really what ultimately works into the corn market is the bin doors get shut tight for winter, and then as long as demand stays solid, then we're going to see merchandisers pushing to get some of those supplies moved back into the pipeline before next spring. So, as we look at the future spreads and we see what's been going on with the May, July, we can tell that's the time frame as we get into planting season. The merchandisers are a bit concerned about getting their needs covered. So, I think again, similar to what I just said about soybeans, I don't believe in analogous years, but I think the structure of the corn market is similar enough to last year that we could see a winter rally. And remember, last year we did see the futures market saw cash move up through mid to late February, then start backing off again. It would not be surprising to see something similar this time around.
Want to go back in time a little bit, Darin. I vividly remember this moment. Last December, we were talking about the outlook for 2025. We asked what's the best case scenario for the U.S. grain sector. You said a crisis. Anywhere and everywhere, we need there to be, not necessarily a crisis. I shouldn't say that. That's not exactly what you said, but that we need a lack of production from another country. Imagine you stand by those words as we start to eye 2026.
Absolutely. So again, because in so many of these markets, the U.S. has been dealt out of the game, and so we do need to see some sort of problem. Now, that being said, and with what I previously mentioned in soybeans, there is something interesting to watch. We've seen coffee take off, and Brazil is one of the two largest producers of coffee and exporters of coffee in the world. And so if there is a production problem for coffee, and I know it's grown in different parts of a very large country, but if there is weather issues for that country's coffee crop, maybe, just maybe, the U.S. soybean industry can hang its hat on the possibility of some weather problems in soybeans. And that is still something that we're looking at as we make our way through fall and into winter, getting closer to, Brazilian crops already taking center stage, but, their harvest comes around late winter, early spring.
Watch the coffee market, see what could happen in soybeans. I like that advice. We can remember that here for months to come. Darin, last week on the program, we did a deep dive with our analyst talking about the cattle markets, and he said something to the effect of the fundamentals had not changed. And that reminds me of a conversation you and I have had repeatedly talking about the grain market. So on the cattle front, his take was the fundamentals had not changed, but we do see a lot of volatility here on Wednesday as you and I are connecting. Feeder cattle limit down again. What do you make of that sector?
Yeah, the previous analyst is right. I mean, we look at future spreads, we look at basis, and both of them are still bullish. Both of them still indicating, supplies have lost ground to demand, and so yes, the underlying fundamentals haven't changed. But it's an interesting point about volatility because feeder cattle are a lighter traded futures market, and when you see that, in other words, there's not as many contracts changing hands, so you get a big order coming in, and you can get some wide swings. So volatility tends to run higher. And right now, but feeder cattle are about as volatile as any market outside of natural gas, which really doesn't count, as volatile as any market that we watch day to day.
Well, Darin, here we are in the month of November as we look ahead. Some producers across Nebraska wrapping up their harvest if they haven't already, and some got a few more fields to go through. What kind of advice do you want to leave our viewers with this week, particularly on the grain front?
Yeah, on the grain front, I like this rally in soybeans as a sell. Again, I don't think the U.S. has become a big player in the global game all of a sudden. So I like to use this rally that we're seeing here in late November as a selling opportunity for some of those bushels that have been coming in. If they want to hold something, I mean, you'd certainly hold soybeans, see what happens as we get closer to Brazil's harvest. But I think the corn market actually looks a bit more attractive longer terms from a fundamental point of view, because a lot of the demand is going to stay with the United States. Regardless of what's said and what's done, it looks like demand's still going to stay strong. So, I think they can hold on to some of this newly harvested corn and see what happens over the next few months.